All right, the big news of the day today was the firing of a Fed governor for the first time, I guess, ever. And so that impacted the markets, but not to the degree as you would have expected. That's a pretty big headline risk event. And in stocks, some areas of the market were impacted by that. We'll talk about what different markets out there outside of the equity market that were influenced the most. But not, we didn't have as big of a reaction. That's actually a pretty good sign, I think, for the markets. You also have tomorrow the release of the Nvidia earnings. I think that's probably having the most impact on the markets. So we're going to break down how we're looking like going into that event. We never know what's going to be released and what the market, how the market will respond. But all we know is what information's out there right now to know. And the market has all that priced in. So we're going to talk about kind of what's the environment or situation, what's the market looking for going into this earnings and what we can expect to happen coming out of it once we start to get. So you can see some short-term volatility is ramping up. The SKEW is ramping up in anticipation for market reaction. I think I saw somewhere that said that this is the biggest pricing move ever for Nvidia coming out of an earnings. So it's going to have a pretty significant impact. So we'll break all that down. And then we'll take a look at what sectors did well today and why. And then within one of those sectors that did all right in terms of outpacing the market, we'll look for our trade idea and try to find a stock that's in a bullish pattern that might not be as strongly bullish as we expect. So we'll talk about how to trade that. So let's go ahead and get started. Today is Tuesday, August 26th, 2025. This is the market outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see we rallied today up about 0.5% on the S&P, almost back up to the old high. It's just a point off of this old high point up here. Obviously, still not a new 4-week high point, as now we've gone, 1, 2, 3, 4, 5, 6, 7 days on the S&P, on SPX. It's not the case in SPY. We just got a new high point yesterday. No, 2 days ago on Friday. Just barely, but it was enough and just not quite on SPX. The rally today brought the intermediate line back up. So it rallied and closed just slightly above 80. However, the near-term line came down and it crossed below the intermediate line. Again, just barely. And this is barely lower, still at very elevated levels, but not in the upper reversal zone. So a little bit of a concern there, but with the momentum line where it's at, I think it will probably end up bouncing back up. That momentum line will end up bouncing back up here the next couple of days and get that near-term line up into the reversal zone as well as the intermediate line also back into the reversal zone further and above the market sentiment. That's my expectation there. Obviously, we're still, more than or almost 1.5% above the 30-day moving average down there at the bottom. So we're, dark green shading and a green line, and been fluctuating a little bit here with light pink shading, but that's okay as long as we don't, get a yellow line and light pink shading, right? That's when you get the bull tags, and that's when you turn into red lines and dark pink shading. We don't want that. So as of right now, we haven't had that at all on the S&P 500, which is a bull tag. Which can be pretty bullish. The closest we got was over here on August 1st. We've had a pretty good run off of that low point of 62.38. We're more than 130 points about 130 points off of that low. So pretty good rally. We've had 2 near-term runs off that low. And as of right now, we do not have a higher near-term high point. But we are at least coming off of a higher near-term low so far. And we'll see, and we're not done. So we'll see how that continues. The NASDAQ 100 was also up 0.5%. The near-term line, remember, crossing above the intermediate line. The intermediate line's turned back up, so we have the dark green shading again. Excuse me. The momentum line was up. Near-term line was up slightly, but it's slightly above that 80th percentile, and obviously we still have a ways to go for the intermediate line to cross market sentiment. The S&P is a lot closer to crossing market sentiment than the NASDAQ 100 is. And the NASDAQ did get a bull tag, and we are still clearly closing above the high of that tag. So, we're not necessarily bouncing up crazy, but we're actually doing pretty well so far. and we're able to maintain the bullishness there. Let's take a look at the Dow Jones Industrial Average. You can see it's pretty strongly bullish still too. The intermediate line's above the 80th percentile. It's above market sentiment, which is now rising again, as you can see there, 79.5 rising. The near-term line did drop, so this, it's got potential of being bearish because it's, it's lower highs. It's not a bullish high point above the 80th percentile, and it happens to also correspond to higher highs. So that would be a divergence, a near-term divergence. We don't get very many of those, but that's what this would be if it ultimately played out. The momentum line is oversold, and it's below the 90th percentile barely, and combine that with the strong bullish posture, and we have a bullish intermediate confirmation signal. So again, I think, again, we are set up for, even though we did bounce today 1/3%, we are set up to bounce up again. So I don't think that we need to put a lot of stock in that divergence yet, because even though it did fall below 60, it hasn't fallen into bearish territory. So we can bounce right back up and still maintain the current near-term rally. And then finally, if you look at the Russell 2000, its intermediate line across market sentiment, its near-term lines in the reversal zone. The momentum line's oversold, just barely, but it's oversold. So again, that combination of an oversold momentum line and a strong bullish intermediate posture is bullish, right? It sets us up for a bullish bounce, and we still got some room to go. Like we're 4% above the moving average, but that's only the 81st percentile the past year. So there's still room that it can go and achieve, and without, getting too extreme away from those averages there. So, we were up, the Russell did the best today in doubling the returns that we saw on the Qs and on the S&P 500. All right, so for the rest of the charts, we're going to take a look at, the breadth, some of these breadth indicators, and it was a risk on day, so I'll show you why, and then with these bullish bounce signals off the market forecast, are we getting other signals too that would corroborate that bounce expectation going into the rest of the week? So that will help us see how likely that is to happen, and then what sectors are pushing that move. So we'll take a look at that as well on these sectors, as well with our trade idea. All right, well, that does it for our Market Outlook preview video. You can unlock the rest of the video at marketscholars.com, down in the links below. Again, all of our Market Scholar subscribers get access to the full version of the Market Outlook video, including our foundation tier members, which start at $29 a month. That's less than $1.40 per video. Again, you get access to the full version of the video, including the trade idea that's at the end of every single one of them. You also get access to the Market Outlook live stream that we do at 3:30 Eastern Time, where we manage all the current open trades from all the old Market Outlook videos, and then put on today's video before the market close. Then you also get access to the Market Outlook live trade tracker, where we track the results of all of these trades over the course of the year, so you can kind of get an idea of how you're doing relative to whatever benchmark you want to put that you want to trade against. So that all comes with the foundation tier. Of course, our premium subscribers and core subscribers get access to our trading rooms that we do, up to 10 every week, and our elite subscribers get access to all of that and lock in the prices. So if and when prices do change, they get the same price for 3 years. That's all, again, down in that link down in the description below. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share the video with anyone else who'd be interested in it. Follow me on Twitter for more content between the videos, and that's all free, so you can follow me there, as well as follow me on LinkedIn, Facebook, any other social media accounts. And then again, thank you for watching, and we'll see you all tomorrow.